Hey educators and savers, welcome to this edition of Educators Financial Foresight Weekly. Today we are talking about something that can shake even the most seasoned investors, and that's market cycles. If you've been feeling uncertain, you are not alone. But don't worry, we're going to break it down and help you navigate with confidence. Teachers, you give so much every day. You're shaping lives and you're inspiring the future. But when it comes to your retirement, the path forward can feel uncertain. If you're an educator juggling demands of busy schedules and financial stress, you are not alone. Many teachers worry about outliving their savings, or managing their pension, or ensuring long-term care without burdening their family, with pensions often alone falling short. Many educators struggle to bridge the gap between what they need and what they have for a secure retirement. That's where Educators Financial Foresight Weekly comes in. Each week, I'll guide you through clear, actionable steps to understand your pension and spot hidden gaps, build retirement income strategy tailored to your needs, protect your savings from inflation and unexpected costs, and plan for long-term care and estate needs without burdening your loved ones. Your career has been about making a difference. Tune in every Thursday at 11:30 a.m. Eastern on YouTube and LinkedIn. Let's build a retirement as rewarding as your career. Welcome back to the broadcast. I am so glad you are here and join me today. My name is Debbie Major, former educator and current financial planner. Each episode of Educators Financial Foresight Weekly is your step-by-step guide to financial peace of mind. Well, last week we talked about Roth IRAs and Roth conversions and thinking about that in terms of whether our taxes are going to increase or not in the future. Well, today we're going to do something a little bit different. We're going to zoom out to get a 20,000-foot view of why markets go up and down and how to stay steady through the chaos. In fact, I spoke with a teacher just last week that said, Debbie, I feel like every time I invest, the market drops the very next day. So I get it, because it can feel that way. But there is a bigger picture here. So let's dive in. Well, here is the issue. Markets don't move in a straight line. They move up, they move down, and these things are going to include growth and peaks and declines and recovery and coming back. But when we're in a downturn, it doesn't feel like a cycle. It feels like failure. It can feel like desperation. And you may even relate to some of these feelings like fear and anxiety and second guessing, or even wanting to stop investing altogether. But here is the truth. Downturns are normal and they are an expected part of the market. They're uncomfortable, but they're not unusual. In fact, if you look at any 10-year period in history, markets have always recovered and they've grown over time. So even though it feels like something now, there is a light at the end of the tunnel. So what do we do when the market feels like a roller coaster? Well, there are a couple of strategies that you can implement yourself and you should know about that'll help get you through this market downturn or market cycle as it goes. Now remember, this is meant to be used not just today in the kind of economic circumstances we're in right now, but to be used also going forward in the future and to be referenced back to. So don't take this as specific advice for your specific situation, but instead take it as general advice, as something for you to look at and compare it to what you've got. Because I know most educators are in things like variable annuities. They're in the markets, or they have mutual funds that are in the market. So you feel it when things go up and down, and you can feel those swings. So the two things I want to just touch on today, though, are called diversification and daily cost averaging. Well, first is diversification. So when I say you should diversify your portfolio, or when any other financial advisor says that, or financial guru, whoever's out there, what they're meaning is you should have
a mixture of the things that you own. So like part of the reason people like mutual funds is they can buy a mutual fund that's based on what was supposed to grow but also protect the principal. And then you know you're going to get some stocks that are bought in that mutual fund and some bonds or some fixed income instruments in that mutual fund. So they kind of help to balance each other out. When you do diversification, you do want to realize and look at, do you have things like large company stocks in there? Do you have medium-sized? What about small-sized companies in there? Do you have things like bonds where you can get a fixed rate? And then there's different kinds of bonds there. Are there other holdings that you can put in there to help make it so that you have a mixture of things that you're invested in? And that way, if one thing takes a downturn, not everything takes a downturn with it, and it will hedge you to going down too much. I also say when you're diversifying that you need to also keep in mind that this could also include your fixed things that you have, like your annuities or your whole life insurance that you can take out money from at times when the market is down. So that should be included in your whole asset allocation kind of diversification. The second thing is called daily cost averaging. And where this comes into account and where it's you want to think about it is if you are still working and you're having money taken out of your account each paycheck to go into your 403b or your account, your savings account. What this does is actually when the market goes down and you keep putting money in, you're buying those shares of stock at lower cost. When you buy them at lower cost, that means when it gets to the bottom, you have more of them. So when the market turns back up, you've got a bigger pot, so to speak, to take care of the upturn of the next market. So that's a really nice thing to do. Don't just stop contributing when you see a market downturn and you get scared. Don't say, "Oh, I'm not going to contribute at all." Contributing then is important. You may want to do other things, and maybe other things to make you comfortable. But for the most part, when you get into investments, you should have a goal and a purpose for each thing that you have. And you should have a time horizon on it that says, I'm not going to touch this or I don't need it for 20 years. Well, if I don't need it for 20 years or 10 years from now, I can probably wait this out. If I need it sooner, maybe I need to think about adjustments. It's all something for you to think about depending on your goals, your risk that you're comfortable taking, and the things that you're invested in and how diverse that is altogether. But daily cost averaging is important if you're getting things taken out regularly or every month you have money taken out and it goes over to your Roth IRA and your investment account, that you don't want to stop those things because that actually is making the market work for you even when it turns down. All right. The bottom line here is invest regularly even during downturns, and it can help smooth out the highs and lows of what you're doing. Okay, so remember there's things we can control and things we can't. And we want to focus on the things we can control and not the things we can't. So we can't control the markets. We can control how we respond. If you're responding out of fear or panic, you tend to make bad choices. So you want to know your own tolerance for risk. How much up and down can you comfortably take that you'd be comfortable with? And know why you invested the way that you have. Is there a good reason you still believe in? Think twice about changing it. You can also ask, is this money meant for a short-term goal or a long-term goal? Again, this is a 20,000-foot look at investment portfolios and what the markets are doing. Your personalized solution should be based on your personal situation. All right, well, we are in spring of 2025. And I know some of you may feel like you're in a storm, like Rookie feels like he's in a storm. And he says, you know what? Winds may howl, but you're stronger than the storm. A blustery day isn't forever. Rookie just digs in his paws and waits it out because he's seen sunshine follow every storm. Okay, so here is what I want you to take away today, please. Market cycles are natural. Our economic cycles are natural too. Your emotions are valid, but they don't have to control your decisions. Daily cost averaging and diversification is your calm strategy through all of the noise. I would also say don't listen to all of the noise. Pick and choose different people's opinions and ideas and advice that they give you out there, but don't sit there and listen to all the people that say, out, 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 you got to do this, and all the people that have to say in, you got to do this. It's never an either or. It's always an and kind of decision, and you're the and. So here's your next step. If you'd like help reviewing your plan or understanding how your pension fits in or just creating peace of mind, I would love to support you. You can schedule a 15-minute call with me on my calendar page, or you can go to my resource page and watch my masterclass, which has all of the ideas that I put together just for educators to help them with their retirement planning and their investment planning. And there's also lots of other resources on that page. The page is full of resources. There's videos on there. There's worksheets you can sign up to. You can get downloaded as PDFs if you would rather read something. But it's all based on helping you be successful and be successful in your future and your future financially. So that's really why we built it, and so I really want you to use it. So please, use the show notes to click to the resource center and see if there's what you can use there to help you feel like your feet are on the right path and they're taking you forward. Well, don't forget to like and subscribe, please, and so you don't miss a show. And I will see you next Thursday at 11:30 a.m. for Educators Financial Foresight Weekly. I'm your host, Debbie Major. Have a great week.